What's up, everyone? Hope everyone's having a great Memorial Day weekend. Thank you to those who have served our country and those who are still serving today. And let's just jump into it. Dow Jones going from 23,685 to 24,465, up 3.3% on the week. Nasdaq up 3.4%, going from 90.14 to 93.24. And S&P very similarly, going up 3.2%, going from 28.63 to 29.55. Now you'll notice the red line on the S&P chart, and if we zoom out just a little bit at a 1 month, 1 week view, you'll see that we actually broke out of the trading range that we've been in for the past month that we highlighted last week. And the next level is the 200-day moving average represented by the blue line. It's roughly at approximately exactly 3,000. So definitely a target that we're looking at for this week. So why did we gap up on Monday? Moderna reported positive results on their phase 1 trials. Basically, the 8 people that were given their vaccine all developed antibodies for the coronavirus. So in theory, they would be able to fight it off should they get the real thing in the future. Now, there's been some skepticism because the company did a secondary offering right after the results. Many people thought they released these results, which are, again, only 8 people, solely to boost the price of their stock before this secondary offering. However, later in the week, Dr. Anthony Fauci, as many of you know by now, actually voiced some cautious optimism about the vaccine, saying it was promising. And he spoke to how, although it was only 8 people, 8 relatively healthy people between the ages of 18 and 55, this was a very good start for phase 1. In phase 1, you're only allowed to test relatively healthy people. And, the senior citizens, unhealthy people, we won't get to those until stage 3, or phase 3, I should say. So this is definitely a good start, but he called it optimistic. And considering we have over 100 companies working towards a vaccine, this is just one swing we have at beating this thing. So why did we gap up at the beginning of the week and not really float up closer to the 200-day moving average of 3,000? The main reason is because there was a bill to delist Chinese stocks moving at warp speed in the Senate, which had bipartisan support. Basically, this bill would force Chinese companies to give up their listings on any U.S. stock exchanges unless they certify that they're not owned or controlled by a foreign government and they adhere to all the accounting regulations of the United States. This is, again, just heightening the issue we talked about last week where the administration needs a scapegoat for their delayed response to COVID, and China, obviously where the virus originated, is the perfect scapegoat. This is probably just a further increase in tensions between the two countries. Also, China put some new draft legislation concerning how they would treat Hong Kong in order to put an end to the protests there. And the U.S. responded saying that they will most likely get sanctioned if that legislation goes through. So either way, as we called a couple of weeks ago, we think the China-U.S. conflict, President Trump has nothing left to hold back on it now. He used to have the great stock market and the great economy to kind of keep him in line, if you will. But now that both the stock market and the economy have an excuse to go down, they're going to go all out on their China hawkishness. And we believe that this is what will cause us to perhaps start the week at around that 3,000 level. We think we're going to go get up and touch it, but then get rejected because the media will start covering the China-U.S. conflict a little bit more. And because we're so overbought, a lot of retail traders, as long as obviously the Fed driving pension funds and other large funds into equities, we think that we're primed for a pullback. Hope that we're wrong, but really doesn't look like it. And again, perception is reality, and we think that the media coverage is really going to bring us down this week. So to end on a brighter, happier, funnier note, we have here a Maryland restaurant that has developed social distancing dining plan inner tube tables. As you can see in the picture, people have these inner tubes that are about 6 feet in diameter, and they can travel around, walk around, talk to their fellow diners while remaining 6 feet apart for sure, because these inner tubes will bump into each other and keep them that far apart. Again, this is a very unique idea, and we've tried to highlight a few unique businesses and their ideas. I think this one really takes the cake. This is almost as good as that toilet paper cake from a month ago or so. But yeah, this is definitely an attraction. If I lived near this place, I would totally want to try this out just to have drinks with somebody while in my personal inner tube. Something once in a lifetime, I feel like, because once COVID goes away or we get a vaccine, this is the type of thing you're not going to see anymore. So something you can experience once in your life and just really enjoy and reflect back on. Maybe tell your kids, grandkids about the huge scare and all the rules we had during COVID. So thanks for tuning in, everyone. Hope everyone had a great 3-day weekend. Enjoy the shortened work week, and we'll see you guys next week.